So over the last few weeks, I've been getting a lot of questions on, how high can the S&P 500 go? How high can the Dow go? They've both reached all-time highs early on in January, early on, obviously, in 2024. Something that I anticipated would happen this year, but perhaps not as quickly as it came about. We have a couple of charts to show right off the bat here with respect to the S&P 500, and you can see here how high the S&P has gone. It's gone past the 4,800 point mark. I believe 4,796 was the previous all-time high, and we're getting closer to the 4,900 point mark versus the previous high. So we've blown way past previous highs. On the Dow, you can see the same thing. We have a Dow chart here, the Dow Jones Industrial Average, which again is made up of just 30 stocks, but you can see how it's reached an all-time high as well this year, again approaching in and around 38,000 points. Hard to believe that back in, well, maybe just 30, 40 years ago, the Dow was maybe 1,000 points, and here we are at 38,000. And so when I say that the one thing that we do know is markets go up over time, you can clearly see that this is the case. So why are markets going up currently? Well, in my opinion, I think for two reasons. Number one, as I mentioned in the fall of last year, we didn't really need to see rate declines or rates coming down to see new highs or for the market to go higher. All we needed to know is that central banks were no longer pushing rates higher, that central banks would no longer have any interest rate increases. And we got that information, or we continue to receive that information from both the Federal Reserve and Bank of Canada. Both central banks have now pretty much said that the next rate movements will be to the downside, will be an interest rate decrease. So that's been a positive. And the market, once it heard that news out of the Fed late last year, the market really has never looked back in the US. And we're hearing now the same talk out of Canada, the Bank of Canada, and now we're seeing the TSX have a great end of last year and a good start to 2024 as well. But let's say they don't lower interest rates anytime soon. Many people were expecting the Fed and maybe Bank of Canada to lower interest rates by March or April. Now, because the economy has been so resilient in both countries, we're now looking at perhaps a mid-year decrease or maybe even a second half of the year decrease in interest rates. So will that stop the run? Well, in my opinion, no. Because I think the way the market is looking at things is if the economy continues to be resilient and strong, well, that's a good thing. And the market should go up because of that, to reflect a strong economy. U.S. economy is growing still over 2%. Quarter number 3, it grew well over 4%. Here in our country, we're growing by just a little bit, albeit, but we're still in growth mode. We still haven't pulled back into some sort of mild recession. We haven't seen any negative growth as yet. Well, we saw it last quarter, but we still haven't seen 2 quarters. And according to the Bank of Canada this morning, we're sort of flatlining here. So if the economy continues to chug along and not go into a mild recession in Canada or some sort of pullback in the US, I think the stock market will continue to move higher. But if we see these two economies, their economies start to falter, in the US, in Canada, we start to talk about mild recessions once again, I think the central banks will cut rates to stimulate, to get us out of that recession or that mild recession. So I think we're in a win-win situation. The economy continues to do well, stock market will reflect that and do well. If the economy falters, well, I think central banks will be quick to cut interest rates to stimulate so that the economy can get back on its feet. And I think the stock market knows this and knows that it's in a win-win situation and understands that there will be gains to come for the 2024 year. And I think the stock market understands that these gains may be less than last year. I'm predicting more of a 10 to 15% growth rate for the S&P 500 versus the 24% growth rate we had last year. I think the TSX can do easily another 7 to 10% like it did last year. Coming into this year, I thought a lot of the gains would happen in the second half of the year when we started to see those interest rate declines. But we're seeing them now because the market is anticipating those interest rate declines. So why has the S&P 500 and the Dow reached all-time highs? Because this market is looking ahead, and when it looks ahead, it sees an economy that is doing well. And if it stumbles, it sees central banks coming in to stimulate so that economies can get back on the right track once again.